Welcome, dear traders. European Union and the United States stock markets kicked off Monday with the losses. After a drop on Wall Street yesterday, the US stock futures remained almost unchanged during the Asian session. At the same time, the stock markets of Japan and Australia were growing even despite the negative news from China. This news affects the Asia-Pacific region as well as the global economy as a whole. Apart from the worrisome pandemic situation in China, traders are concerned about weakening global demand. On a Monday, China expanded restrictions for millions of people in several cities as the number of new cases approached the levels unseen since April. It means that the government will hardly ease restrictions as a part of the zero-COVID policy. Beijing stated it's facing its most severe COVID test. The government may impose even stricter lockdowns. It intensifies fears that the world's second-largest economy may contract soon. Market participants are also anxious as the Fed meeting is approaching. They are now closely following the speeches of the Fed policymakers. Last week, St. Louis Fed President James Bullard dashed hopes of a softer stance. However, some Fed members made less hawkish remarks yesterday, which helped stocks avoid bigger losses. San Francisco Fed President Daly warned that adjusting too much could lead to an unnecessary painful downturn. She added that the central bank would need to raise rates above 5% next year if inflation does not decline. Cleveland, the Fed President Loretta Mester also hinted at a less aggressive rate hike at the December meeting, saying that it would be appropriate to slow down monetary tightening. We've had some good news on the inflation front, but we need to make sure that we are returning to price stability, Mester stated. And however, it will take time before inflation reaches the 2% target. So far, there have been plenty of signals that the key rate will be raised again. However, traders have already anticipated it. The main question is whether the Fed will slow down the tightening cycle after a rate hike in December. According to the FEDWATCH tool, more than 71% of market participants are betting on a 50 basis point rate increase at the December meeting. Given the contradictory statements of the Fed policymakers and the moderate optimism on Wall Street, the recovery of the US dollar has slowed down again. In the Asian session, it dropped across the board, trading at 107.50. Last week, traders brushed the close long positions following even a slight decrease in inflation. However, on Monday, the US dollar index jumped by almost 1% again, amid the worsening coronavirus situation in China. Besides, the greenback needed an upward correction after a sharp sell-off in the last few weeks. Now, investors are rather cautious ahead of the release of the Fed meeting minutes. They will be looking for hints of a probable shift to a dovish stance. So the US dollar index is consolidating in the range of 107.40 and 107.80. As usual, the yen climbed following a drop in the US currency, although its appeal as a safe haven currency has weakened significantly. It's gradually rising versus the greenback. Yesterday, the dollar-yen pair advanced by 1.2% to 142.10, demonstrating the strongest intraday increase since September 6. In the early morning today, it was trading at 141.70. Analysts predict an even stronger recovery for the yen. However, the overall outlook remains bearish. In the Asian session, the yen was moving in the price corridor of 141.50 and 142.20. Support levels are located at 139.60 and 138.60, while the resistance level is seen at 142.20. Demand for the yen was also spurred by the verbal interventions of policymakers. Prime Minister Fumio Kishida said that the weak national currency increases the profits of exporters but hurts consumers and some businesses due to higher import costs. A weak yen has both pros and cons, he pointed out. Japanese Finance Minister Shunichi Suzuki vowed to guide economic and fiscal policy in a responsible manner. The environment surrounding Japan's economy remains severe. There is also concern about a global recession. We must overcome this crisis, he stressed. A risk-sensitive Australian dollar is also climbing today. It has already recouped some of yesterday's losses, trading at 0.6631 in the Asian session. To cement the upward movement, it needs to consolidate above 0.6797. Support levels for the pair are now located at 0.6607 and 0.6577. It's likely to rise today to the upper border of the 0.6600 and 0.6636 range. The kiwi was able to grow as well. It's rapidly moving up ahead of the Reserve Bank of New Zealand meeting scheduled for tomorrow, and an increase in the trade balance. It approached new highs, moving in the range of 0.6093 and 0.6145. In the Asian session, the pair touched 0.6137. And that's all for now. The Fed meeting minutes are on tap tomorrow. Hit the subscribe button and keep your finger on the pulse. Don't miss our next video reviews. See you soon.